last evening, Canara Bank did come out with its numbers, a 22% increase in the net profit, largely supported by the core business growth, but also because of non-interest income. Essentially, because of the rate cut, the net interest income has actually not grown that well, and non-interest income is the one that is contributing to that profit growth. I do have K. Satyanarayana Raju on the line with me right now, and we want to take through the entire discussion around results. Mr. Raju, welcome to this conversation. I just wanted to talk about the 22% net profit growth. I'm trying to understand what is exactly contributing to this growth, sir.
So one is the majorly that's our fee income growth is almost more than 16%. That's near to that 17% fee income. Quarter on quarter and year on year also there is a good growth in that fee income. The second one what we are getting is the treasury income this time contributed very good because of our AFS, whatever the is their portfolio. RBI has conducted twice that OMO operations. In that we got some 500 crores worth, more than 500 crores we got benefit. That also has helped us in growing in that net profit. The third one is PSLC is there always in the first quarter with the priority sector because our priority sector advances are much more than the regulatory requirements. Those excess amount we generally sell it in the market in the form of PSLC. Since this time there is a huge demand for that PSLC, we got a higher commission and that has helped us in almost 1200 crores we could garner from them. So non-interest income has helped us, overall non-interest income has helped us in showing that 22% year-on-year growth in the net profits.
Right, sir. So on the NII front, I wanted to ask you, non-interest income I understand, but on the NII front, why has there been a dip during this Q1 result? Is it largely because of the rate cuts or is anything else contributing to it?
Yes, if you see that the interest income, there is no reduction. We could maintain that absolute numbers of 31,000, near to that 31,000. But the cost of funds is stable, but the yield on advances has come down. The absolute number we could maintain because our average advances has improved. Our credit growth is more than 12% year on year. In the June quarter, maybe there is a good growth in the credit. That's why in absolute numbers, interest income is maintained. But when it comes for that NII, the negativity is because our yield on advances, because of thrice that the RBI has cut the repo rates almost to the extent of 100 basis points. So it has percolated down that so the repo linked borrowers immediately thereafterwards. So it has main cause for that reason for that our yield on advances has come down from 8.83 to 8.47. That's almost a 36 basis points reduction. That is the main cause for that NIMS reduction or the NII reduction.
I also wanted to touch upon the return on assets figure, the ROA. That has also dipped during the quarter. What do you think has contributed to that, sir?
Naturally, sir, when the rate of interest is coming down, the return on asset actually Q on Q it is 101.14 we got it. That the main reason is if the NII is coming down or if your NIMs are coming down, yeah, it will have its own direct impact on that. But the whatever we have shown that in the first quarter 1.14 of ROA, that is a much above than that our guidance figure of 1.05.
So are you looking to maintain that 1.14% ROA for the rest of the year then? Is that something that you're guiding for?
Hopefully we will maintain that. So that because the first quarter generally little business will be little sluggishness will be there. It's gradually picks up and the second half of the financial year will be peak in the business in the banking sector. So the returns and all will be improved gradually. And I'm sure that we may be able to maintain this.
You've also spoken about this 12% credit growth number. I just want to understand what's contributing to that figure, sir.
So generally, the 2 years back only, we have given a guidance to that entire investor community that from 54% of our RAM, we want to move towards the 60% of RAM, and within 3 years, we want to touch at least 58%. I'm happy to share with that this by the end of the June quarter, our RAM has crossed the 58% out of that our total advances book. That is safeguarding our yields on that to some extent. Our corporate, though the corporate growth is there, opportunities are there, but we want to grow at a steadily not at par with the RAM sector growth because of price constraints. Even then, our corporate is growing at 10%, but our RAM is growing at 15%. So we want to continue that in the RAM sector. So we want to continue above 14% in the RAM sector and 10% in the corporate overall. So that will help in our credit growth in the maintaining at 12%.
Right. Even on the deposits fronts, I noticed that the CASA deposits has dropped sequentially. The ratios also slipped. What has led to this is largely because of a repricing of your savings account?
No, sir, it's nothing to do with the sharing the savings rate. Actually, you should, if you see that our banks, specifically our banks portfolio continuously last 2, 3 years, we have some institutional branches opened within the institution, central PSUs and PSCs. And in every year in March, we get some good amount. There's more than 25,000 crores in those accounts. That will reflect in the CASA at the March year end. So that's what actually the March 25, if you see that current deposits, it's almost 77,800 crores was there, but it has come down to 54,000 crores. That means we lost 23,000 crores. That's 20 to 25,000 crores. The movement is only in the institutional deposit, but the saving deposit in the individually, if you see that we are growing on an average 6%. And the present days may growing at 6% is very good. That may be because of our innovative products and initiatives, what we are taking and targeting them, and we are achieving that target in SB individuals. But the slight problem is there in the SB institutional deposit and the current account institutional deposits. You know that the whatever the central government decision on the treasury operations of keeping that balance is not in the banking industry. So that is also causing for that draining of institutional deposits in the saving and the current deposits. But however, we have introduced recently one product targeting for the institutions that is not for the government deposits, but other than that, government deposits, hospitals, educational institutes, societies, pilgrim centers, like that, any of those NGOs, housing societies, all these things targeting, we have brought a new product giving a innovative features to them, and I am sure that that will compensate to some extent. And the another thing, let me say that because why it is looking at that the percentage wise, if you see the total business or the total deposits, our CASA is percentage wise it is coming down is the we are getting a good opportunity is growing in the credit at 12%. But at the current scenario, growing CASA at 12% is practically impossible. But at the same time, we can't lose that opportunity, whatever we have in the credit side, that we are meeting from the term deposits. That's why ultimately, since the overall business is growing at 11% and the CASA is growing at 5 to 6%, that have impact overall in when you compare that percentage wise, it will come down gradually, sir.
All right, Ms. Raju, thank you so much for joining us on this conversation. Pleasure talking to you as always. That was Canara Bank's MD and CEO, Satyanarayana Raju, talking us through the Q1 FY26 set of numbers.